We want to continue on with our wrap the week segment. I did want to start with a poll on our StockCharts TV page. We always have a poll running, and I encourage you to take some time to answer the question on there anytime you can. Also on our YouTube channel and on Twitter, we put out a regular poll. Recently, we asked you this week, which of these ETFs do you think performs best through year-end 2020? Gave you three choices: U.S. stocks, global developed stocks, global emerging stocks. And the votes are in 78% saying U.S. stocks, so the SPY. 3%, the smallest number, saying EFA, which is global developed markets. And then 18% of you saying emerging markets, EEM. You know, it's an interesting one. We're going to talk about some of these different stories here as we get to our wrap the week segment. But you know, pretty impressed with the breakout in EM, which is why I was interested how many would respond that way in the survey. About 20%, 18% of you, which again the overwhelming majority said U.S. stocks, and that's a decent bet based on the trends. What's interesting though is what we've seen recently in the last couple of weeks. You've seen a rotation lower in the dollar. You've seen EM breaking out to the upside. Out of EM, EFA, and SPY, which of those three? Only one of them has broken to a new 52-week high. It's EM. It's the chart we're looking at. So, you know, it's interesting that as that theme evolves, what's interesting to me based on that poll is I think a lot of people, they're not thinking about non-U.S. stocks as being an area of focus, but I would be focused on the trends. And you see it emerge in a place like EM, I would pay attention to it. Let's continue our wrap the week segment. Let's look at this weekly wrap chart. We're going to refresh it just to get through the close. This is how the week ended up. The S&P is right here. This is taking the percent return from last Friday's close. The S&P finished up this week about 7.25%, and these might fluctuate just a bit as we're processing the closing prices, but that's about right for where we're going to end up here. Sort of chopped around here. These all got jumbled around here at the last second, but emerging markets, small caps, and the S&P all within that margin of error right around the S&P. So about 7 to 7.25%. Only two assets really outperformed the U.S. market or U.S. stocks. The NASDAQ was up over 9%. The real winner was Bitcoin, up almost 14%. Most of those gains came yesterday with a huge gap higher, a huge move higher in Bitcoin prices, pretty much, and cryptocurrencies across the board. But Bitcoin is the one we're following here, up the most out of these asset classes. What underperformed? Crude oil actually had been hanging in okay and started the week pretty strong, but sold off the last couple of days to be up about 4.8%. Gold only up about 4%. Bond prices actually still higher. So we talked about that stock bond ratio clearly has been favoring stocks, but both assets actually were up this week as yields came off a bit. So bonds up 1.25%. So only one out of this basket underperformed. That's the dollar, down 1.9%. Let's look very quickly at just some of these asset classes and think about the charts here. This is the U.S. dollar chart. This isn't updated for today's close. This is through Thursday's close, but it came off a little bit, so it's going to be a little bit further down around the 92.30-ish level. I want to say. We'll see where the closing price comes in. But we talked about this and right about here, as it broke above trendline resistance, as it broke above a new swing high. I've talked about most likely dollar is going to continue higher. Retest this 96.40 to 96.50 level. That's the 200-day. That's the first Fibonacci resistance. That's also this bear flag pattern that we had back from June. Seemed like a very reasonable thesis. I have to say at this point, that's pretty much broken, and I'll declare a loss on that one because the lower high that we've seen here on the dollar index right below 94.50 sort of confirms a transition to this lower trend, and now we're testing the very all-time low. So again, this could end up being a broad bottoming pattern before we revert higher, but the upside is not happening right at this moment. This is weaker rather than stronger. And speaking to the weakness in the dollar relative to other currencies, and in general, when you think about the dollar and the value of it, it's not always just in a vacuum, right? So the dollar does one thing, that doesn't mean all these other things are going to happen. But there's a traditional relationship, right? A stronger dollar tends to be stronger for U.S. stocks, and especially for small caps. The weaker dollar environment you see here should be favoring some non-U.S. markets, and you see the breakout in EM, not so much in EFA, but certainly with emerging markets. So certainly a theme to be paying attention to as we go forward. Gold sort of chopped around here, but it started to resolve to the upside. I wanted to highlight here because it's broken above its swing high. We've talked about the sideways trend in gold. We talked about it, trading between these two Fibonacci levels. We've talked about its inability to break above Fibonacci resistance. That all changed on Thursday. Sort of everything was in a rally yesterday. Bit of a follow through, just a little bit today, but overall we're back above that key resistance level that we've not been able to be above. So overall, I think this opens the door to gold continuing further. As we've talked about, I still see long-term upside to the previous highs, if not further. And I think this may have been the beginning of that uptrend. So worth paying attention to the GLD and gold stocks for sure if you've not been paying attention to it as much. We talked about bonds. This is the TLT, so it's sort of chopping around here. It's just like gold has rotated higher, bond prices have not. So up today a little bit, depending on what you depending on what you looked at, but overall still sort of chopping around this general area. And again, I think being able to get back above the 50-day moving average would be the first step for the TLT, sort of resuming an uptrend. At this point, it continues to be a pattern of lower highs and lower lows, and that's not what uptrends are made of. That's a downtrend. The other thing to do is pay attention to the trend line connecting these previous highs. We traded just above it, but still not able to follow through above, and I think that's one of the charts to be paying attention to. Just very quickly, as I mentioned today, the S&P chopping around, not really finishing meaningfully one way or the other. If there was a story for today from the equity side, I would say it's small caps underperforming. Small caps down 1%. As we get to our Mindful Investor Live chart list, we'll focus on that cumulative advanced decline lines. This is not going to help the small cap or mid cap trends, and the small cap trend in particular is one that we've been talking about. The absence of confirmation from small caps, I think, is one key missing part of the bullish thesis here. Bond prices, I mentioned, down just over 1%, yields a little bit up, but overall for the week finished weaker. The dollar a little weaker as well. Gold and silver up a little bit, just a token amount, and cryptocurrencies essentially up except for Bitcoin today, which was down a little bit. But overall, you've seen some strong moves and strong upside with a lot of these over the course of the week. The sector picture was pretty mixed today, and it's an interesting way to finish the week. Every day of this week has had an interesting message. Tuesday, it was the expectation leading into election day, election night into the morning, overnight Eastern time was where you saw a lot of movement in the overnight futures. But then Wednesday was about a rally on limited participation, limited breadth. Yesterday was an upside move with very much confirmation, all 85% of stocks moving higher. Today was sort of a flat day, sort of a mixed bag. You had consumer staples, technology, materials, 1, 2, 3 up. You had energy, financials, real estate at the bottom. About half the sectors higher, half the sectors lower. This is the definition of what I would call a digestion day, right? A big move, you have a digestion. You've eaten the big meal. You now need time for it to settle in your stomach before you sort of get to your next activity. And so, a perfect way to end this this crazy week, this sort of volatile week in terms of expectations and how fluid they've been. It'd be interesting, obviously, as we continue to process news on the elections today versus where we're at Monday. Might be in a very different place in terms of having some sense of closure to what might be next at the in the executive branch and elsewhere. So that could lead the way for next week and what to expect there. The rest of our time, we're going to spend in the Mindful Investor Live chart list. If you've never looked at this one before and you want to get access to it, it's through StockCharts.com. Click on Articles. Up here in the upper right, go to my blog, which is called The Mindful Investor, and you'll see this link for a live chart list that'll take us to this page. You're welcome to follow along, save them to your own log, and do whatever you want with them. Chart number 1 is the long-term market trend. It's actually pretty interesting because the long-term trend has been positive. It hasn't changed. That's about right. And we're this close to all-time highs, even on the pullbacks. That's about right. It's interesting a little below there. So the short-term signal actually turned positive in the last couple of days. This is looking at the week where we're at right now versus the 5-week exponential moving average. It was negative the last couple of weeks, actually back to positive as of Friday's close. So overall, suggesting the short-term trend positive coming off of that swing into the strength this week. The medium-term trend, it looks like finishing the week still negative. It turned negative last Friday and remaining negative this Friday. Pretty close to turning positive. It didn't get quite enough of a rally to trigger it. If we continue to remain about these levels, most likely that would turn positive next Friday, and we would have positive across the board. If we would come off a little bit, that will most likely remain negative and kind of go from there. So that's about right, given where we're at. I think we were, right at that tipping point where the medium-term sort of weekly model would turn positive. Didn't quite do it. The daily chart, as we've talked about for a while, I think this range of 3,200 to 3,600 is really the range, and I don't feel super optimistic about dramatically higher highs beyond 3,600. Just like I don't feel super optimistic about dramatically lower lows below 3,200. It seems like this range continues to be the range, and again, I will absolutely tell you the moment that we break out on better breadth. I will tell you when we break down with some sort of increased negativity. But at this point, it still feels very range bound. We literally, if you take a step back to look at the 30,000 foot view of this chart, we hit a peak in February, we hit a low in March, we then retraced 100% of that move. We overshot the February high a little bit, and then undershot it, overshot it, undershot it, overshot it. We've literally been rotating around the 3,400 level as a midpoint to this coil pattern. So this is in some ways could be just a big double top of sorts. That would be invalidated if we break above 3,600 and confirm an upside move. That would be very validated if we break below 3,200. I think would end up being potentially a major double top pattern. Between now and then, we're range bound. I would expect that to continue. As the S&P has tried to regain its previous highs, when we look at the breadth picture, and as a qualifier, remember this is not quite updated for today's close on Friday just yet. That'll come a little later, but you can see how this plays out. I would not anticipate it moving much further to the upside given where we close, but we'll see. But you can see that the S&P advanced decline line, cumulative advanced decline line, has confirmed a break to new highs, really breaking to almost all-time highs this last couple days. The mid-cap one actually also as well, just sort of retesting almost to the penny the all-time high there. So those two have broken above their swing highs from August. The New York Stock Exchange has not yet. The small cap index has not yet. And I would expect both of those to come out, given the small cap index was down 1%. So it's interesting. My guest on Wednesday, Frank Capillari, made a great argument for this line here, the strength in the S&P advanced decline line. And I can't argue with that. It's absolutely right. For looking at the S&P and looking at the S&P advanced decline line, it appears that it's already confirmed to break out to new highs. That shows strength. For me, though, I always look at a couple others as well, and I think the mid cap does confirm that. The small cap does not, though. And again, can the market continue to rally without small caps breaking out? Of course, it's happened before, but I feel much more confident about further upside when it's confirmed across the board, and especially if these are making higher peaks and the small cap index is not. That starts to tell me to be skeptical. Again, this one not quite updated for today. This is new highs in the S&P. Wednesday and Thursday certainly saw an acceleration of that. What's happening now is we have the same number of acceleration of new highs that we saw leading into the October peaks. This is looking very similar, a run higher to that 3,550, 3,600 level, increasing new highs. That was the end of that move, and we're showing a similar pattern here. Further upside could be confirmed if you see the new highs continue higher and higher. And I think going into next week, that's one certain open question mark. Breadth in the form of stocks above their moving averaging remaining pretty positive, to be honest. These had sort of gone neutral to negative as only 30% of stocks are above their 50-day. That's rotated back to about 2 out of 3, so 2/3 of S&P stocks above their 50-day moving average. We're going to skip a couple of these just for the sake of time. I just wanted to finish with this one. I'm thinking of the weekly, week to week, in terms of one chart that has followed through to the upside and is certainly a check in the bullish column, is the relative strength of semiconductors. On a price basis, new 52-week highs for the SMH. On a relative basis, new 52-week highs. Overall, when that group is doing well, it tells you economic conditions aren't too bad, and the market is voting higher rather than lower. We'll stop with that.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.